After 11 straight months of falling benchmark pricing, the Fraser Valley market may just have given us the first real sign that the decline is finally slowing down. But before you get too excited, this is not a full recovery. Sales are still below last year's averages, inventory is still high, and the Fraser Valley is still in a buyer's market territory. So the real question is this: are we finally stabilizing? Or is this just a normal spring bounce back before the market weakens again later on this year? Today, I'm going to break down exactly what happened in the Fraser Valley real estate market in March of 2026, where the strength is showing up and where the weakness still is, and what buyers and sellers need to pay attention to right now. Hi everyone, this is Roshan Victor. If you follow the Fraser Valley market, whether it is Surrey, Langley, South Surrey, White Rock, Cloverdale, Abbotsford, and the broader lower mainland, make sure to subscribe to the channel and click the bell icon. I put out regular data driven updates like this to help you understand not just what numbers are, but what they actually mean. And if you're thinking about buying, selling, or investing anywhere in the Fraser Valley or the greater Vancouver area, you can reach out to me directly using the link in my description below. So now let's look at the numbers. Fraser Valley recorded 1,007 sales in March. That was up 19.5% from February. So, yes, activity improved month over month as we moved into the spring market. But here's the part that matters more: sales were still 2.8% lower than March of last year, and they were also 42% below the 10-year seasonal average. A month prior to that, we were 51% below the 10-year seasonal average. So that's a 9% improvement. So this is not a hot market. It is not a market that had suddenly bounced back. It is a market that is improving off a weak base. Now let's look at listings. The board recorded 3,347 new listings in March. That was also up from February, but it was still 12.1% lower than March of 2025. And that matters because when sales are down a little, but new listings are down even more, that can start to reduce some of that pressure that has been building in the market. It does not mean conditions are tight. It means the imbalance may not be getting worse as quickly as before. Now, active listings ended the month at 9,201. That was up from February, but basically flat year over year. And that is one of the most important patterns in this report. Inventory is still elevated. In fact, the board says it is 50% above the 10-year seasonal average. But because active inventory is no longer surging year over year, we must be starting to see the market move from worsening to stabilizing. That is a very different story. Now, despite that, this is still officially a buyer's market. The overall sales to active ratio listing was 11% in March. To be in a balanced market, you typically need to be between 12 and 20% sales ratio. So if you are a buyer, you still have leverage. If you're a seller, you still need to be realistic. And if you already own real estate, this report suggests that the market may be finding a floor in some segments, but it has absolutely not returned to the strength across the board. Now let's talk about prices because this is where the story gets interesting. The composite benchmark price in the Fraser Valley rose 0.3% in March to 898,300. Now, that may not sound like a big move, but according to the board, this was the first month over month increase in benchmark pricing in 11 months. That is meaningful, not because it proves the market has bottomed, but because it tells us that the pace of decline may be slowing. Now, let's break it down by property type. For detached home, the benchmark pricing was $1,375,600. That was up 0.3% month over month, but still down 8.7% year over year. For townhouses, the benchmark pricing was 772,700, also up 0.3% month over month, but still below, but still down 7.3% year over year. And for apartment and condos, the benchmark pricing was 489,200. Again, up 0.2% month over month, but still down 9.2% year over year. So, what does this tell us? It tells us this: prices are still below where they were a year ago across every major category. But the month over month decline has stopped, and at least for now, that is not the same thing as a recovery. That is stabilization. And in a market like this, stabilization usually comes first. Now, one quick note: the average sale price for all property types in the Fraser Valley was 962,167. That was up 5.4% from February, but still down 6.4% year over year. I would be careful not to overreact to average price. Benchmark price is usually the better measurement because average prices can move around depending on the type of home that's sold. So, example, if a higher price property and multiple higher price properties sell, it moves up the average price. And if multiple lower price properties sell, it brings the average price of sale down. So, which segment is holding up the best? Right now, the answer is pretty clear. Detached homes are showing more strength at this point. Detached sales in March were 347. That was up 7.8% year over year and up 36.6% from February. At the same time, detached new listings were down 17.6% year over year, and detached active listings was down 6.4% year over year. That is a much healthier setup than what we are seeing in other segments. In simple terms, detached market improved and detached supply did not flood the market. That is why detached looks the most stable part of the Fraser Valley real estate market right now. Now let's look at townhouses. Townhome sales were 264. That was down 6% year over year, even though it was up from February. New listings are down, but active listings are slightly up. So townhouses are not collapsing, but they are now showing some resilience as detached. They are somewhere in the middle. And then now let's get on to condos. This is still the weakest segment in the Fraser Valley market. Apartment sales were 279 for the month of March, down 15.7% year over year, and the benchmark prices were down 9.2% year over year. Now, yes, there was a tiny month over month increase, but overall, condo demand is clearly still soft than the detached demand. The board also pointed out that the buyers are seeing greater choices, improved affordability, and meaningful incentives, particularly in the condo segment. So, for buyers, condos may offer the best negotiation window. But for sellers, this is probably the segment where pricing discipline matters the most. Now, let's zoom into a few local areas because this is where the market gets even more interesting. Let's start with Abbotsford. Abbotsford had one of the strongest reports in terms of activity. Detached sales were up 3.9%, townhome sales were up 21.1%, and apartment sales were up 43.9%. And detached benchmark pricing in Abbotsford was down only 5% year over year, while rising 2.2% month over month. That suggests Abbotsford saw a real spring back in March. Now let's look at White Rock and South Surrey. Detached sales were up 26.8% year over year. Detached benchmark pricing were down 9.2% year over year. But townhouse benchmark pricing was up 0.6% month over month, and apartment benchmark pricing was up 2.1% month over month. So even though prices are still down compared to last year, this area did show some short-term firming in March. Let's look at Langley. Langley looked more mixed than any other market. Detached sales were flat, townhome sales were flat, but apartment sales were down 30.8% year over year. On top of that, active apartment listings in Langley were up 13.8%. So the condo supply pressure in Langley still looks like something to watch out for. One side note on Langley and specifically Willoughby townhomes. Willoughby townhome sales ratio was around 30%. That means the townhome segment in Willoughby is in the seller's market. It may not be a strong seller's market, but nevertheless, it is in seller's market. That is something to look out for if somebody is looking at or considering Willoughby townhomes. You may need to keep a very close eye on what's happening in that market and act rather than react. Now for North Delta, detached sales were up 35%. This is strong, but the attached category had very low volumes. So I would be careful about reading too much into townhomes and condos in that area. And if we focus on Surrey combined, which is obviously a key market, for many of you watching, detached sales were up 12.6%, townhome sales were down 13.8%, apartment sales were down 20.4%, and benchmark prices in Surrey were down across the board. Detached benchmark prices came in at 1.4635 million. Townhomes were at 792,700 and apartments were at 477,100. So Surrey overall still shows weakness year over year. But month over month, things are much more stable. And again, that supports the broader theme of this report. Not recovery, but stabilization. So, what's my take on all of this? The market feels better than it did a month ago, but that does not automatically mean the bottom is in. And that is how I would frame March. This is not a breakout month. This was a watch this closely month. The market is no longer deteriorating as quickly as before, but still is below normal sales levels. It is still a buyer's market territory and it is still carrying a lot of inventory relative to historical norms. So I would call this not a recovery yet. What I would say is this: March may be the first month that tells us the pace of weakness is starting to slow down. And if you're a buyer, this market is giving you something that was very hard for you to find in previous years: choice, time, and negotiation room. The average days to sell in March were around 39 days for detached, 36 days for townhouses, and 43 days for condos. That means you are not fighting the kind of hyper competitive market we saw a few years ago. You can compare options, you can negotiate, you can select, and especially in the condo segment, you may find motivated sellers and projects offering incentives. So, for buyers with stable financing and a long term horizon, this market may actually offer better value than the headline suggests. And now for sellers. This is not a market to test unrealistic pricing. The biggest mistake sellers can make right now is to think that 1 month of stabilization means the market has turned back in their favor. It has not. We are still in buyer's market. Sales are still below last year's average and inventory is still elevated. That said, if you own a detached home in a desirable area and you price it correctly, the setup today is better than it was a month or two ago. The detached segment is clearly showing the strongest relative momentum. And if you are selling a condo, you need to be even sharper on pricing, presentation, and strategy because buyers have more options and much more leverage. Going into April and May, here are things I'll be watching out for closely. First, do a new listing stay restrained year over year? Because if new listing stays lower while sales stabilize, it is supportive for pricing. Secondly, does active inventory remain roughly flat year over year? Or does it start to climb again? If inventory rises sharply, then this March stabilization story that we are sharing could fade quickly. Thirdly, do benchmark pricings continue posting small month over month gains? 1 month is interesting, 2 months to 3 months starts to become a trend. And fourth, does the condo segment start following detached or does it remain sluggish? Because right now, detached is clearly the strongest segment. Townhouses is a mixed bag, and condos remain the softest part of the market. So here's the bottom line: the Fraser Valley real estate market in March 2026 showed the first real signs of stabilization we have seen in a long time. Sales improved from February, benchmark pricing ticked up for the first time in 11 months, and year over year inventory stopped getting worse. But this is still a buyer's market. Sales are still weak relative to the norms, and prices are still down significantly from a year ago. So, no, I would not call this a recovery, but I would say this: the market may finally be shifting from falling fast to flattening out. And in real estate, that can be the first sign of a big change. It always starts in small increments. If you found this video helpful, subscribe to the channel, leave me a comment below, and let me know what do you think. Do you believe the Fraser Valley market has bottomed? Or do you think this is just a spring bounce back before more weakness later this year? And if you're thinking about buying or selling in Surrey, Langley, South Surrey, White Rock, Cloverdale, or anywhere in the Fraser Valley, reach out to me directly through the link in my description below. I'd be happy to help. See you in the next video.